Hello traders and welcome back to the Forex Geek. Today's video will explore an essential tool for traders, which is the Cumulative Volume Delta. So understanding the CVD can significantly enhance your trading strategy by providing insights into market dynamics and participant behavior. So by the end of this video, you will learn how to interpret CVD, analyze its signals, and apply it effectively in your trading decisions. Stay tuned as we delve into this powerful indicator that can help you make more informed trading decisions. So let's get started. So first, what is the cumulative volume delta? So the cumulative volume delta, or CVD, is a trading indicator that helps you understand the balance between buying and selling pressure in the market. It measures the difference between the volume of buy orders and sell orders over a specific period. So CVD is calculated by taking the volume of trades that occur at the ask price buying and subtracting the volume of trades at the bid price or selling. So this gives you a net volume figure that reflects whether buyers or sellers are more aggressive during a given time frame. So this is the CVD. You can see it on the chart. It's already on the chart. The CVD has a separate window, and the time frame selected for this analysis is the daily time frame on the CVD. So a positive CVD indicates that buying pressure is greater than selling pressure, and this suggests that buyers are more aggressive and may lead to upward price movements. Conversely, a negative CVD shows that selling pressure exceeds buying pressure, indicating that sellers are dominating the market, and this can often precede downward movements. You can see that it's quite clear here. You can see the CVD is quite above the zero line and is shooting upwards, moving higher, which means that there's more buying pressure in the market, and as you can see, it's reflected in this uptrend that lasted for a long time, about 2 weeks. Yeah, from September 11th September to October, the 1st of October. Yeah, and you can see the CVD was able to give us the signals. You can see higher buying pressure, buying volume than selling pressure, and this means that we should be looking for buying opportunities and not selling, because there's more buying pressure in the market than selling pressure. So it's always wise to trade with the big money and the big volume players in the market. So for instance, if you see a rise in CVD like this while prices are also increasing, it confirms that buyers are driving the market higher, like I said. And on the other hand, if the price rises but CVD is falling, this could signal a potential reversal, since it shows that buying strength is weakening, or you could call it divergence. And let's discuss in-depthly how to analyze the CVD and how to use it in your trades. So the first step, like I said, is to observe the relationship between the CVD and price movement. So when you see the CVD rising alongside price, indicates strong buying interest, and this is a bullish signal, so suggesting that the upward trend is likely to continue. So you should be looking for potential buying entries and buying opportunities. Like, you could use price action with the CVD. You could try spotting key levels. You can see this is a key level. This was a resistance level that turned support, and you can see price reacting off of this, and you can see we could confirm that with this rising CVD, and the rising CVD here also confirming that yes, this is a valid support level, resistance turned support level. This was another zone. You can see that. I see price giving us the rising CVD as we go to that zone. You can see this rising CVD around here, confirming that yeah, this is a valid support zone. And generally, we had turned bullish, and there was lots of CVD shootouts at the CVD rises. So we are kind of bullish. So it's wise to look for bullish trades and not bearish trades. As you can see, there's less selling pressure. the CVD is above 0, and it indicates that we should be looking for buying trades. Just following price action, you can see price coming back to support levels to trade. Price was just basically coming back to support levels to trade, and you can see price you can see the CVD confirming it right here with this positive shoot, and the same thing here with price. So showing that there's enough buying pressure, and we should be looking to take trades. You can see this was a major resistance level and turned support, and you can see it holding price here. You see the CVD confirmed that as it held price right there, and have one more, have this one right here, and you see the CVD rising as we hit this support level. So it's just about using key levels with the CVD, confirming our key levels with the CVD. Rising CVD means that there is more buying volume and pressure in the market, and if we see it at key levels like your support or your resistance levels, then it's an indication that you should be looking to take the trade. And then we turn bearish here. You can see more selling pressure than bullish pressure. You can see there's little to no bullish pressure in the market, and should be looking for bearish trades. And you can see price reacting to zones. You can see this impulsive move, and you can see it reflecting here as you can see that CVD below 0, and that reflects that yes, we are indeed selling, we are indeed bearish. There's enough selling pressure in the market. Another way to use the CVD, aside from the buying and selling pressure, and just if the CVD is below 0, you should be looking for selling pressure, and if it's above 0, you should be looking for buying pressure and buying opportunities, is using the CVD to look for divergences. You could look for divergences between the price and CVD. So for instance, if the price is making new highs or new lows but the CVD is not, this divergence can signal that the present momentum is weakening. For example, here you can see price giving us bearish price action, giving us lower lows and lower highs, breaking structure to the downside, but the CVD was giving us higher highs and higher lows, as you can see right here, which signal that this bearish trend is weakening, and we might be looking for a bullish trend afterwards. You can see price confirming that with this series of price action, bullish order flow price action right here, before we had the major breakout, and then a good retest back into this support level before we had the push to the upside. It was just all built up from this divergence right here. You can see price was selling, but the CVD was buying, showing us rising buying pressure entering the market, and it could mean that we should be looking for bullish moves in price. And this is another example of a bearish divergence. You can see price giving us higher highs and higher lows, but the CVD was giving us a lower. The CVD was giving us lower highs and lower lows, as you can see right here. And this could indicate that we should be looking for selling opportunities in the market, opportunities to short. And you can see after this, we saw this market giving us we switched from bullish to bearish. Markets that are giving us lower lows and lower highs, and breaks to the downside right here. So that is another way you can use the CVD in your trades. Also, you could consider using CVD in conjunction with other technical indicators like your moving average, your RSI, or your MACD. For example, combining the CVD with moving averages can help you identify trends more clearly. If both indicators align, such as a bullish crossover moving averages and a rise in CVD, you have a strong case for entering a bullish trade. I'm just gonna try to put that for us. So I'm just gonna select the moving average simple, and yeah, I'm gonna set it after. I'm just gonna use the 21-day moving average, and I'm gonna change the color to red. Exactly. This is wonderful. And now you can okay, this is giving us multiple signals. Let me adjust the length. Just gonna use 20-day. As you hear, I'm gonna use 50. Yeah, now we have less signals. You can see here that we were bullish with price giving us a multiple buying pressure. You can see the alignment between the moving average cross right here and the CVD giving us this push to the upside, and it happened multiple times. You can see this cross right here, and you can see the rise at CVD here also. And I mean, it went on and on. You can see this one have this cross, and have this at the same time. The CVD giving us the rise in buying pressure entering the market, which means that we should be looking for opportunities to buy and enter the market. And the same thing happened when the selling pressure was increasing, also with the CVD going below the zero line. You can see CVD giving us increasing selling pressure, and it happened almost exactly the same time with the moving average cross. So that is how you can use the cumulative volume delta to trade. Always remember to manage your risk effectively, and use stop loss orders based on key levels identified through CVD analysis. This will help you protect your capital in case the market moves against you. So alright traders, you've come to the end of the video. If you found this information helpful, please like the video, subscribe to the channel, and turn on the notification bell so you never miss an update. Your engagement helps us continue to provide valuable content for your trading journey. Until next video, happy trading.